The purpose of accounting is to provide useful information about the performance, the financial position, and the cash flows of a business to the users of the information. So who are the users of these information, like cash flow, revenue, net profit, and so on? Who are the users? The users can be investors. They can be the company management itself. They also can be the shareholders of the company. They can be the government. They can also be foreign investors, domestic investors, private investors. So there are many users who are trying to figure out how the company is. Is the company a safe investment? How is the company doing in the past? How will the company do in the future? Those kind of informations we want to know precisely and also in the most objective manner possible. So let's see another case where cash basis corporate performance can be misleading. So let's say there's a company, we have 2019, 2020, and 2021 sales, expenses, and profit. So we can see that the company is doing great. The sales is growing twice, 2 times and 2 times, very high growth. Expenses also quarterly growing together. Maybe some of you are noticing that the company is having a little bit of operating leverage, which we will discuss later on. And as a result, the company is reporting profit worth 70, 140, and 300. So it's a very good company if you just see the profit. But let's say the CEO decided to make a plant expansion. So they're building a new plant worth $400, and adding to the $100 expense before, now the company is making an expense of $500. So in 2021, sales was $400. There was an expense occurred worth $500, and now it's a negative profit. Now it's making a loss of $100. If you're a user who's using this financial if this is an income statement, if you're a user who are looking at the income statement, you would probably think that, well, the company's 2021 profit was negative, so probably it's not a good company. Or, if you're an analyst or if you're a private investor, you would be like thinking, why did sales grow twice, but why was there a very big, increase in expenses? And you have to find out the story behind the increase, and obviously it would be time consuming and inefficient. So instead, to most accurately measure the company's performance, now we're doing an accrual basis corporate performance, where rather than just adding the $400 of capital expenditures to expenses, now we're splitting the $400 in 10 years. So plant expansion of $400 being split into 10 years of 40 individual expenses. So if we compare the 2021 results, the results are completely different. Now they're making profit. Before, because of the plant expansion, they were making loss. And, for example, if you're the CEO of this company, you would never be able to make these kind of decisions. Obviously, you would be very, scared to make expenses. If you're being measured at a profit-based performance, and your bonuses or your tenure depends on the profit performance, you would never be able to make these kind of investment decisions. So accrual basis corporate performance, as you can see in this case, is much more reasonable and describes the company's performance much more accurately and objectively. And that's accrual basis accounting. There's going to be millions of cases where this happens, where cash flows and accrual basis accounting is different. And we're going to study the cases one by one in our future videos and also in our modeling or analysis classes.